Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at oil and natural gas. Okay, let's take a look at United States Oil Fund. So yeah, this has been super beaten up. Unless you've been living under a rock, you know oil has been completely punished, and there's some catalysts coming up next week with the OPEC meeting on Thursday. I'm not sure if you caught the Argentina G20 summit start, but there was interaction between Putin and the Crown Prince of Saudi Arabia, and they gave each other kind of a bro handshake, and yeah, they seemed really cordial with one another. So the big takeaway here is what's going to happen next week? Are they going to increase or production, or is production finally going to start decreasing? Is Saudi Arabia going to lay off the gas, and lay off the pedal, and reduce the flow of oil? That would get the USO moving higher, and so that's what people are looking for this week, is whether or not there's going to be some production cuts coming out of the Middle East there, and possibly getting a oil rally going. We'll have to see if maybe there's a pre-rally run leading into Thursday. You know, they might do there might be some buy the rumor, and so keep an eye out for that. But the big event's going to be coming up on Thursday next week. And so let's look at the chart here. You can see how the candles have been riding this pink line lower. There was a close above right here back in October, but notice how it keeps failing to stay above that level. On the 19th of November, there was another close above EMA 4, but notice how they quickly pulled it back below again. And so that is the key level to break. It's currently at 1083. You can see intraday, the last 3 days of trading, it traded above that level intraday, but each day they pulled it back and they failed to close it above. And so what we're looking for is a break above EMA 4, and then there is this gap over here. There's a gap between low of day on this candle and high of day on this candle, and so what you're looking for, if it does break and close above EMA 4 at 1083, we're looking for a run up here to about 1150 to fill this gap between these two candles, fill this space, and then run up to this EMA 13 at 1141. And so what you could possibly see is a break above EMA 4, and then this gap fill, and then once it hits this EMA 13 and fills the gap around 1140 or so, that it could find a temporary top. If it were to close above EMA 13, that would be really bullish, and that's where you could see it possibly run back into the 12s to test that middle Bollinger Band. It has to get above the middle Bollinger Band at 1192 here, the dotted purple line, to get a new uptrend going. Similar to back here, if you look in September, the candles are above the dotted purple line, and they're riding the pink line higher, and so that's what you're looking for after this huge pullback, you know, from up here at 1625 all the way down to 1050. You know, is this the week coming up where oil finally bounces? Are the catalysts going to come through? Is everything going to come together, and then the oil rally going to finally happen? You could see down here there's been a lot of volume, big volume at the bottom, so people have been, you know, trying to catch the falling knife here. People are betting on a potential bounce. You can see they started loading back here, and yeah, they pushed it lower. You can see the big candle on the 13th, the big volume bar. And now, you know, people are playing the catch the falling knife game. What you need to look out for is 1050. If it starts trading below 1050 next week, that's going to be a major red flag. Right now, that was the low of day today, or on Friday. You can see 1051 up here was the low, and so it's going to need to hold that level in order to get a bounce going. So we'll keep an eye on it. So it needs to break above 1083 and hold 1050 to get a bounce going next week. If you look here at the USO 15-minute chart, you could see here that it's been consolidating for the last several days, since the 23rd, when it had the big gap down open. And notice how it's had a series of lower lows. Okay, so it keeps making lower lows. We need to see a higher low. That would be a good start. Now notice on Friday it came down here, and it didn't retest this 1050 support zone on the pullback, so that is good. It was getting above the green and gold lines intraday, and it looked like it could start heating up. It keeps you know, head faking on that. You can see the gold line here is the big level to turn into support. That's the 100 simple moving average at 1084. Notice the 1084 lines up with 1083 as EMA 4. So so it's all about the 100 simple moving average in the 15-minute chart and EMA4 on the daily chart. Once both those levels turn into support, that should be the signal that a bounce has started. And what you're looking for is a break above high close horizontal resistance in this in the pattern from last week, and that's lining up right here with this 200 simple moving average at 1105. It's basically the 11 resistance zone. If USO can start trading above 11 next week, it could possibly come up here and fill the gap, the top of the gap from on the 21st. Okay, so between you know, you've got the high here. Really, the bottom of the gap is right there. It's the high on the 23rd is the bottom of the gap, and then up here the low on the 21st is the top of the gap. And so what you could possibly see if it did break above the 200 simple moving average in the 15-minute chart is a run up here to the 300 simple moving average at 1137, and you can see here right about 1142 is the top of that gap. Okay, so we're going to keep an eye on it and see if it can heat up next week. Take a look at UNG. This is the other play. So while oil has been crashing, natural gas has been on this parabolic run. They're basically a complementary play right now. It's basically, you know, the trade has been long natural gas and short oil. And so what we're looking for is a rotation of that play, a flip to long oil and short natural gas. Not sure when that's going to happen, but the charts are looking like they're hitting some resistance here for UNG. This is the United States Natural Gas Fund. And you can see here, look at the closes for the last several candles. You can see, you know, there was a couple of closes below, but notice that 1, 2, 3, 4, 5, 6, 7 of the last 9 candles have all closed in the same trading range here. Look at all the real candle bodies are in the same range. So this is a very, very tight trading range, and so it's all about breaking this 38 resistance. If UNG can start trading above 38 next week, it could run back up here to the high close on the 14th of November, and it could test the 40 resistance zone again. That's the upside potential, is a retest of 40. Notice how there's a descending resistance, and so a break above that descending resistance line above 38, that puts 40 on deck. Now what we've been looking for is a break below EMA4. That's at 36.82. That's the pink line there. Notice how they've been clinging to it. Once they let that break, it could drop down to this green line here. That's the ascending support. Notice how this is a symmetrical triangle pattern. You could see a drop down here to EMA 13 at 35.20. There is a micro gap between the 27th and 28th of 8th of last week. A drop down to EMA 13 and 35 that would fill that gap. Now it would get really interesting to the downside if UNG broke this EMA 13 support line. Notice how it held on the previous pullback during this run. Once it gets below that 35.20 level, that's where it could come down and test the middle Bollinger Band at 33.54. So you have a symmetrical triangle pattern. When that happens, a break above descending resistance signals upside potential, and a break below ascending support signals downside risk. The candles are coming to a flex point. At some point, it looks like next week, this pattern will end and a new pattern will begin. We're either going to see a breakout higher for natural gas or a breakdown lower. Notice the volume. Okay, so check out the volume bars down here. You could see there was this volume spike on Wednesday of last week, and then it actually finished Friday with relatively light volume. And so, is that signaling to us that the buyers are tiring up here? Are they, you know, are they going to have enough juice to break through resistance, or is the volume going to be to the downside? Well, if you look at MACD here, you can see it's already started the bearish crossover on the 8, 13, and 5. And what you want to look for is this 12, 26, and 9. It's pretty pinched right here. If the black line, the MACD line, crosses over the signal line to the downside, that should signal downside risk. Notice how the histogram bars have been declining. You know, they've been retracting, and that signals that the run is cooling down. Also, there was a PSAR bear flip last week. You could see the green dots were below the candles when the share price was rising, but then on this big drop on Monday, it flipped the dots above the candles. So that does signal a possible change in trend coming. Another thing to keep an eye on, watch ADX here. Plus DI, the green line, is pinched with ADX, the black line. If that green line crosses over the black line to the downside, that will signal downside risk risk for natural gas. Also, right here, you did have a bearish crossover on FASTO. You can see the black line crossed over the red line to the downside. That signals the chart is cooling down a little. Okay, now let's look at the 15-minute chart for natural gas. You can see here on the 19th, it made a high, and then here on the 21st, it made a lower high and a lower high close. And then you had, when it came back down, bottomed out, and then came back up, it did make a higher high than the 21st, which that is bullish, but it failed to get back above the high close here from the back on the 19th. And so what that does is it signals that the chart is cooling down a little bit. And so what needs to happen for the bulls is it needs to make a new high close. It has to break the 3860 resistance zone. It needs to make a close above that level on the 15-minute chart. Failed to make a new high close in the 15-minute chart, and this will continue to lose steam. Notice there is descending resistance here. It looked like on Friday it was breaking down. You could see it broke below the moving averages here early in the day. But what it did, it came down there and it hit that 200 simple moving average, the red line, and it bounced right off of it. And the bulls were strong into the close. You could see here at 2:30 there was a climax spike. You could see the climax spike, and then it pulled back. Notice previous climax spikes. Okay, check out the 28th. Pushed really hard. Then you had a climax spike, and then what happened? It pulled back, and then back here, on the 21st, you had the climax spike, and then it pulled back. And then over here on the 19th, you had the climax spike with the big volume bar, and then it pulled back. And so the question is that going to repeat? It happened here on the 20th as well. You had the volume spike, it pulled back, and then it was able to push higher after that. But the point is it seems like natural gas, when it hits a temporary top, a volume spike is accompanied with that temporary top, and that usually signals it's hitting resistance. And so if that's the case once again, now you have another low high. So it made it keeps making lower highs on the bounces. You can see here it needed to bounce back today on Friday, back above that 38 level and close above the 28th. Failed to close above that 38 resistance zone. It's going to signal downside risk. And then what you're looking for, if you want to see the chart breakdown, is it just has to get down here and break this 36 support zone. This is where all the moving averages are converging on the 15-minute chart. You can see there's the 300, the 200, and the 100 simple moving averages all converged around 36. Once you see a break below 36 and this 300 simple moving average turns into resistance, that's where you could get the big drop down here to retest that 33 support zone. Okay, let's look at UGAZ here. So UGAZ is the velocity shares 3 times long natural gas ETN. So this is moving 3 times the movement of natural gas. And so if natural gas UNG goes up, this will go up 3 times that movement. If natural gas goes down, this will go down 3 times the movement. It's 3 times whatever the bull of whatever UNG is doing. And so right now this has a good uptrend going. It's very solid uptrend. It's just been consolidating heavy in the current zone. You can see here, look, once again, just like natural gas, look at how all these closes are within the same range. You have 7 of the last 9 candles have all closed in this very tight trading range. And so it has to break above the high close resistance, which was the closing price on the 28th. If it can get above this like 172, 173 resistance zone, and it can close above this consolidation zone, that's where it could head higher and run back into the 2s. You could see it run back up here and test the previous highs. Now, if it stalls out here and it fails to turn 170 into support, it could come down here. There's this micro gap that it could fill between these 2 candles, and it could come down and test that middle Bollinger Band at 143.59. That is the big support level to hold. If that level were to break, that's where it could really pull back, could come down here and possibly retest that 50-day simple moving average support zone down here around 107. As long as the middle Bollinger Band holds and the pullbacks, the uptrend is intact. You can see when it pulled back each time in November, it bounced right off the dotted purple line. The middle Bollinger Band is also the 20-day simple moving average on the daily chart, and so it needs to hold for the uptrend to continue. A break below that level, that would signal downside risk and a bearish change in trend. Yeah, if you look over here, MACD did have bearish crossovers on both time frames, but it's pinched right now, and so it's trying to get a crossover going. It did have that PSAR bear flip. The candles are above the dots are above the candles, and you do have Fasto in the bull zone, or RSI in the bull zone at 56. Fasto needs to heat up and get back above 50 for the bulls to get moving again. It's really all about breaking above 170 next week and turning that level into support. Failed to do so, and it could pull back and retest the 150 to 140 support zone. If you look at the UGAZ 15-minute chart, you can see it made the high back here on the 19th, and then a lower high on the 21st, lower high close, and then when it bounced back up on the 28th, it actually made a lower high close than the 21st and the 19th. And so you have a series of lower high closes creating a descending resistance line. And it's a signal that on the bounces, it's failing to get back above those previous levels. That is a signal that it is cooling down. And then intraday, you also had the descending resistance going on. You can see here. So you have lower highs intraday. So you had here, I guess I can go like this. You had a high, a bounce, a lower high. I guess in the last 3 days, you know, there's been a consecutive last 3 days of lower high closes, and so I'm always looking at the closes on the 15-minute chart, and has to keep making new high closes to signal it wants to keep pushing higher. And so you have the high close, lower high close, lower high close. It's all signals that it's breaking down. Now the one thing is it did have a bullish move on Friday, so that's kind of throwing it off a little bit. The bulls were, you know, for the bear case, you know, the bulls were strong into the close. They don't want to give up on natural gas. You can see here it was breaking down. It looked like it was going to come down here and possibly test this 151 support zone, which needed to break for the bear trade to work out here. And you know, that level held. You know, once it gets below, you can see all the moving averages are converged here. Once it starts trading below 152, 151, you know, this 152 support zone, that's going to signal that it's breaking down. It bounced right off of the 152 support zone today, or on Friday, and held that level, and it bounced really hard. You can see it did have the climax spike type of volume spike into the close here, and then it faded after that spike. So was this just a technical intraday play here, where people were just, you know, they loaded off the lows here? You can see there was some loading right here when it hit the bottom, and then yeah, are people, you know, did people exit and then they're on the sidelines, or were people loading UGAZ, you know, heavy into the close here for a possible push higher next week? You know, it's hard to tell. It's just, to me, it looks like the chart is losing steam. It keeps making lower highs. It's going to have to break above the 172.50 resistance zone next week to head higher above this descending resistance. If it starts trading above 170, 172.50, that should be the signal that it's pushing higher. If it fails to break those levels, look for a retest of the 150 support zone. Trading below 152 next week would signal downside risk. Okay, let's look at DGAZ here. So DGAZ has been really beaten up. A lot of people are playing the DGAZ bounce. Yeah, it's very oversold on RSI. Once RSI breaks above 30, that should be a good clue that it's trying to heat up after being below 30 for several weeks. You know, you have Fasto pegged at 250. This is an extreme oversold condition. Now there is some bullish divergence here on the ADX. You can see here the red line crossed over the black line to the downside. You know, and so that is, you know, when stocks are very bearish, you know, you have the red line above the green and the black lines, and so yeah, you can see here as it's breaking above, you know, it's a little bit of bullish divergence, you know, signaling the chart's trying to heat up here. It's trying to find support. It's trying to find a bottom. Down here, if we look at the volume bars, you can see there was a really big volume spike on Wednesday. And so people, you know, it looks like they were, you know, they're trying to play the bounce down here. You know, they tried to play the bounce right here, and it didn't work out. You know, it's gone sideways. And so in order to head higher, it's going to have to break above EMA 4 at 52.82. Okay, that's the pink line here. Once it gets above that line, the EMA 8 at 62.34 will be the next key level to break. Okay, so you have all the candles here, not all the candles, but you have these last 7 of the last 9 candles have all closed within this tight trading range. And so it's going to be all about holding this 49 support zone. It has to break above 52, you know, be trading at 53 and higher. and then hold that 49 support zone next week. So trading at 53 and above should signal upside potential that it's trying to bounce. If it starts trading below 49, that's going to signal downside risk. Yeah, if you yeah, what was the low today? 48. So yeah, so 48 is the level to hold. Break below 48 and it's going to signal downside risk. Has to hold that level. If you look down here at MACD, check out the 12, 26, and 9. It just started a bullish crossover on Friday. You know, the chart is still in a very, very bearish downtrend, but you have a bullish crossover on MACD. That's a signal the chart's trying to heat up. I mean, it's similar to back here. When it had a bullish crossover and it was finding, you can see when it starts going sideways, it starts finding support, but it failed to rally back then and it dropped further. But this is a sign that you know it's finding support. It had a bullish crossover on the 8, 13, and 5, and so yeah, we'll just have to see here if it can get above that EMA 4 level to signal that it wants to head higher. Now, if you look at DGAZ on the 15-minute chart, you could see here it's making some higher lows. You have a low here on the 28th, and then yeah, you've got the low here on the 29th, and then you have the low here on the 30th. And notice how the low of day and the low close of day, which are different, are both higher for each of the last 3 days. So here's the low and the low close at 2:15 on the 28th, and then you have the low and then the low close on the 29th, and then you have the low and the low close on the 30th. So it is making higher lows. That is a sign that it is finding support down here. And so it has a symmetrical triangle pattern going on. Notice how this descending resistance is lined right up with where it topped out at. So you can see the trend line. It lined right up with where it was failing to break today. So it's all about breaking this descending resistance line, basically $52. If it starts trading above 52, that should be our clue that it wants to head higher. The moving averages are all consolidated here. It basically needs to hold 48 and break above 52. Trading above 52 next week should be bullish. And then what you want to see is a break above the closing price at 12 o'clock. That's the top of this 2-day channel. And then that's around 53.50. A break above that would put the 100 simple moving average at 55.51 on deck. So yeah, so keep an eye on oil and natural gas next week. They're definitely in play. And so we're going to be looking to see if there can be a change in trend for both commodities next week. All right, thanks a lot for viewing this video. If you'd like to learn more about charts and technical analysis, please come check out the chat. Thank you.